if I keep working out and Strazza keeps wearing his muscle shirts, we're going to change the name of this to The Gun Show.
I had my muscle shirt on and I changed out of it right before the shoot into the shirt. The Gun Show, special muscle shirt edition.
Hey, what's happening, everybody? It's your boy, Chicago Sean. I'm the Chief Option Strategist at All Star Charts. We are joined by Steve Strazza, our Head Technical Analyst. Is that your title? Do you have a title? You have a title.
I think I'm the Director of Research these days.
Ooh, that sounds fancier. Okay, let's go with that one. Director of Research. All right. Hey, you're CEO in my book.
Don't tell JC. Yeah.
All right, so it's been a couple weeks. This is the flow show where we dig into unusual options flow to see if there's anything happening under the surface that we want to pay attention to, if the options flow is surfacing some ideas that we might be interested in for other reasons. But before we went live, Straz and I were just kind of shooting the breeze, and we were looking at the list that is up for today, and we were both kind of commenting how, boy, there just really isn't a whole lot out there. Is that what we said?
Yeah, like where are the big put buyers in this type of environment?
Right.
You know, which
by the way jives with I think it was JC that put up a chart in our Slack this morning about how the put call ratios. The put call ratio is like far lower than it's been at previous market sell-offs. So
you would expect it to be higher.
Right, we expect it to be higher. So that jives with we're not seeing big put buyers here. I mean, I'm looking at that list right now, and everything on that list except one trade is someone buying calls on the offer. Yep. Whether they're being whether it's a speculative buy, if they're being aggressive, they're making a directional bet. Either way, none of that is bearish.
and look at what they're buying too. I mean, some of these calls are already underwater. Look at Pinterest twice last week, obviously playing earnings. I think the stock is down 40% right now. Mm-hmm. A lot of that growthy stuff. I see Robinhood. Yeah, Robinhood is on here. Listen, I like the way some of these growth stocks are setting up. Robinhood looks really interesting if it's above 10. Zoom is another one. They actually beat today, not on this list, but from the same mold, these really long duration equities. But it seems like, they're buying dumpster diving in many ways. Kohl's missed earnings, has been really under pressure the past few weeks. Kohl's made our list this week. The one that really stood out, so two stand out. One we talk about a lot on here. It's a theme that we've really just, run into the ground and talked about all year, which is energy and the relative strength from energy. So Chevron on that list saw some bullish flow, and it looks like very near dated call options. But Chevron's been coiling since basically February. I'll pull up the chart.
Yeah.
So really, I mean, it's built up the energy. See what I did there? For a fresh leg higher. I'm going to zoom in on the chart right here. So you have a nice little base, right? Prior uptrend. Price has been basing now since, what is this? Call it early March. Okay, so almost 3 months of basing now. And you can absolutely buy strength on a move above those pivot highs, call it like 175. So I like that one on there. What do you think about that?
I'm a little bit distracted because I'm looking at your chart and I'm wondering, what is that black line at the bottom, the relative index comparison? What's that telling us right there?
That's just price relative. This is telling us that this is one of the stocks we want to be in, right? So Chevron bottomed, kind of did like a nice little double bottomy thing on a relative basis. This is simply CVX plotted against the broader market. We use the Russell 3000. Think of it as CVX relative to SPY. You're going to see something similar. But new highs on a relative basis tells you this is leadership. And then we're pressing right on new highs on an absolute basis. That's one of the things I love seeing, right? So great question. Thank you, Sean, for the assist. Look at how the relative trend looks very similar to the absolute trend. I can pretty much draw the same pattern on it, and seeing the relative trend lead, by that I mean we already broke out here of this little base, took out those pivot highs on a relative basis, is great evidence. Love seeing that in long setups, right? Stocks that we want to get long, love to see the relative trend lead the absolute trend. What that does is it suggests that not only is the stock likely to continue to outperform, but it suggests that the absolute trend is likely to break out and look similar to the relative trend.
And so did I hear you say that you saw some bullish call buying in that
Yeah,
name?
be at the top of the list. Let's take a look. Yeah, so we got Chevron up here. They were the 520, so they've already expired. This is obviously last week now. So very near dated calls in the 170s. So I guess slightly in the money. Yeah, ever so in the money.
Well, I mean, look, the setup, just from a purely technical standpoint, it looks great. And, you know, we're talking our book here a little bit. We've been in a Chevron position here all year. We bought some leaps that don't even expire until January of 2024. So we've got a lot of time here. We're already well in the money on this trade. But looking at this with fresh eyes, if I was looking to put more, you know, bullish, positive delta exposure on right now, I mean, this name would have to be at the top of the list. I mean, this is a great setup in the best sector, at least the best bullish sector out there right now. Yeah. I mean,
so how do you treat something like that, Sean? Right, because the trade that you have on now, the leaps, we were buying that massive base breakout in Chevron at a very long-term time frame. Would you have an aversion to getting back into another Chevron trade that maybe actually had a different time frame, like something like this? We got a 3-month base. We could play it for a quick leg higher on the resolution of the base, and then still keep the leaps and treat them, you know, as a longer term setup. Yes or no?
Yeah, I'm conflicted on that. As a general practice, I do not do that. If I'm already in a position, I just let the position do its thing and work. Because what I feel, and I'm just talking about me here, I feel like if I were to add a new layer here, a new position in, then all of a sudden this position that was kind of just coasting for me right now, and I'm not thinking about it, and therefore not making any mistakes on, all of a sudden I got a lot more skin in the game because I just doubled up my position or added more, and, you know, might lead me into making some rash decisions that I'll later regret. So that's just me. I know my limitations as a human and as a trader, so I don't do that. But fundamentally, for people who have a good plan for something like that, I have no problem with that. If you've got a great setup that looks like an independent new setup, treat it as an individual trade. If you can make that work for you, by all means do it. I mean, this looks like a great setup right here.
So psychologically, I had something similar happen with Oxy, right? I've been long Oxy warrants since like last year. Probably a very large portion of my non-trading account, my savings account. And then I've been trying to get in Oxy and play this little bull flag breakout for the past few weeks. Been caught up in some false starts. And whenever it happens, I say to myself, rather than use like risk management procedures like I typically would, I say, oh, I have a nice built-in gain on Oxy. Let me give it some space. I'll give it more space than I typically would because I have these warrants and I've done well on them. I think I've lost 2 or 3 times now.
Right. Like that's the other risk, right? Like you have a trade that you got in and it's going really well, and maybe you've been in it for a few months, and then you add another layer onto it, and then you start playing mental games with yourself. I've already got a big gain. I could give this some room, and before you know it, that nice gain that you were sitting on has just completely evaporated because of that second leg you added. Yeah, and that's no fun either.
All right, no, a great answer. Let's talk about China. Should we short China then? Is that the move?
Yeah, so China's the only put trade that showed up on that list, which is interesting. I mean, China has been in a long-term downtrend for quite a while now.
And that's information too. When me and Alfonso were talking about the setups on this week's list, the first thing I say is, what do we have in terms of bearish flow? We got one, and that's the short that we put on through Follow the Flow. Usually we'll have like 4 or 5 bearish transactions, and we'll put on a long setup through that product.
Well, speaking of information, the fact that this is just the only bearish play that's showing up on the Follow the Flow list.
Weird.
I mean, when we finally get a week where 80% of those trades are put trades, I mean, maybe that's the near-term bottom we're looking for, or it means the near-term bottom is soon. It's happening soon.
Yeah. The fact that ahead of something like Pinterest earnings, we're seeing bullish flow and not bearish flow, to me is a little bit strange at this point in the game.
I got to tell you, man, it makes me nervous. I mean, as a long-term bull, as an optimist, right? That kind of information makes me a little worried. It just tells me that people, we still have not wrung out the the gambling mentality, the speculating mentality that's still out there. I mean,
Yeah.
if you're a long-term bull, you want to see. I mean, we've already seen like the NASDAQ stocks and the software stocks. We've seen a lot of these stocks come way back, and that's, that it is what it is. But you still see all these crazy things like the NFTs and the cryptocurrencies, and you still see people with like funny money throwing caution to the wind and buying into these things. And until that mentality kind of has a virtual or a mental washout, the next great bull market can't start. In my opinion, it can't start until we kind of flush out some of these excesses. And I don't mean it has to be, we don't have to have a market crash. We don't even have to have a significant drop from here. But even if we just corrected through time for the next 6, 8, 12 months, that would be very constructive to me as a long-term bull.
So we're just talking about the broader market now. I love it. And I think you're spot on. I was at the Bitcoin conference, or it's called Permissionless. It's a big crypto conference in South Florida last week. People are not bearish enough. They're not scared enough. I thought after this blow up in Luna and all these stablecoin issues, like sentiment in that space would have been souring. No, people are still bullish as hell. I think it has a lot to do with the fact that the sell-off has been so orderly too. Like there's been no scary action from a tape reading perspective. I'm not coming to my desk and more like, oh shit. None of those moments. COVID, it was like that, I feel like, the whole time. We haven't gotten there. It seems like sentiment, regardless of what some of the sentiment data says, it seems like people are still, when I look at this options list, the number one thing I think is, all right, so options traders are still trying to catch a falling knife.
Right. And so none of this stuff to me screams bullish. None of it screams bottom. None of it screams safety. I just feel like we have more grinding to go. That grinding could be, like I said, it could be lower or could just be sideways. But I have a hard time seeing us, seeing the broader stock market going back to highs until we see some change in sentiment on those items that we just talked about.
Let's do a little exercise. I'm going to invert this chart. We talk about buying charts that look like this all the time.
Right.
So this is a super nice base. You got this breakout level at the former lows, right? Because we're looking at things upside down right now. We would be buying this chart all day. Would we not, Sean? I mean, These are the charts that we buy. So really what's going on here is China is not pressing on new highs. China is pressing on its lowest level in over 10 years. So this is the MSCI China iShares ETF, testing the 2011, 2016 lows. I mean, what a great place to define risk. And we're in a bear market right now. International equities are a mess. This is your laggard. This is one of the weakest areas around the globe. We have a very liquid trading vehicle to use to express that. I think this is a no-brainer short if you're looking, to just short the world. You want to short the world stock market? I think FXI is a great way to do that.
And I agree with you, Strazza. I'm rooting for you to be wrong on this one, though. And here's why. I feel like, and nobody tunes into our show for our fundamental takes. So let me just put that disclaimer right up there. But if we see China significantly breaking below here, so I mean, this is a 10-year base. That is, to me, tells me that the market knows that this saber rattling happening between Beijing and Washington is about to get worse. And that's not good for anybody, I don't think, in my opinion. Anyway.
I think you're probably right. Again, I'm not the person to ask about it. From a purely capital markets perspective, put all geopolitics aside, China's already kind of using their ammunition. So when things get bad in the global economy, when the consumer gets hit, China's a major net exporter, does most of the exporting around the world. So what do? When global demand starts to slow, which we're seeing now, you can usually tell that that's happening by looking at the renminbi, right? So if you look at the Chinese yuan, they weaken their currency. And by lowering the value of their currency, they make their exports maybe equally as attractive as they were before demand was slowing, right? And try to sell the same amount. And we saw China come in and really weaken the yuan past few weeks, and they've stopped. So I'm asking myself, is there more to come? We're going to weaken some more. And risk assets always come under pressure when the yuan is being devalued. Or is that it? Is China good? But whenever you see them come in and mess with the open market, mess with the currency markets, and really bring down the value of their own currency, it means that they're scared. And if China's scared about what's going on in the global economy, you should probably be scared about your portfolio. Based on.
Right on. Well, hey, look, Strazza, we just surprised ourselves. We came into the show looking at that options flow chart saying, wow, there's like nothing, there's nothing here. It's not a whole lot to talk about, but we put our heads together and we parsed out the message, Strazza. The message is that all those bullish trades that we were seeing in the options market are telling us that we're not there yet. The bear market has not bottomed or is not over. That's the information. I think that's the big takeaway here. So going forward, I think we still need to proceed with caution. We need to be tactical in our bets, whether we're making bullish or bearish bets. They got to be short term. You got to pick our spots, and you got to define your risk and know when you're getting out and get out quick when you're wrong, because that's the type of market we're in right now.
Yeah, I think we're going to see this table turn a whole lot more red before the bottom's in.
All right, Strazza with the last word. I love it, buddy. All right, everybody. Thanks for tuning in to the Flow Show. We'll be back again next week. We'll catch you around next time.